Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Friday, 16 January, and this is your London Open Brief. Three things set the tone. The yen is firmer, on fresh hints of possible Japanese action and an earlier central bank move. Safe haven metals cool as Iran tensions ebb. And chips are back in focus, with a big U.S. expansion from Taiwan's TSMC alongside signals of broader U.S. tariff action on semiconductors. Let's start in Asia, where the yen was the standout overnight. Japan's finance minister said all options are on the table to support the currency, including the possibility of joint intervention, and reporting suggests some Bank of Japan policymakers see scope to raise rates sooner than markets expect. That combination pushed yen crosses lower, while the broader dollar index softened as recent jobless claims reinforced the case for the Federal Reserve to hold steady. In Europe, the euro is treading water, just about 6-week lows, with the European Central Bank's chief economist reiterating there's no near-term rate debate if the baseline holds. In policy and geopolitics, Europe is weighing tougher Iran sanctions, and after deadly protest crackdowns, some capitals are pushing to label a key Iranian armed branch as a terrorist entity. The broader European conversation is turning more defensive, from deterrence to infrastructure protection, while farm ministers are struggling to reassert control over the bloc's agricultural budget. In the UK, the Statistics Office is evaluating a delay to its overhauled labour market survey, prolonging a period of data uncertainty that has frustrated policymakers. Turning to commodities, gold has been choppy, recovering back above about $4,600 overnight, even as easing Middle East tensions trim safe haven demand. Silver, which surged to a record this week, is pausing after the U.S. deferred tariffs on critical minerals, and positioning looks crowded after a retail-driven run. Oil is a touch firmer on the day, but the rhetoric from Tehran points to restraint, which has taken some heat out of the safety bid. On the corporate and trade front, TSMC plans to accelerate its multi-billion-dollar Arizona build-out following strong earnings and a U.S.-Taiwan trade agreement, a supportive signal for the chip supply chain. In Washington, officials framed new AI chip tariffs as a Phase 1 step, hinting more could follow. Meanwhile, China moved to curb high-frequency trading by pushing servers out of exchange data centers, a notable change to market microstructure. Trade flows are shifting too, with India's exports to China jumping in December, while shipments to the U.S. slipped amid tariff pressure, and Canada and China exploring a reset focused on agriculture, energy, and finance. Market and sector focus, yen strength is pressuring pairs like Aussie yen, while dollar rupee is pushing higher on foreign outflows from Indian equities. Dollar franc is edging lower, despite fading safe haven demand, and euro dollar remains heavy near recent lows. In crypto, Bitcoin, Ether, and Ripple are under short-term pressure in a technical down phase. Looking ahead, it's a relatively quiet calendar today, with attention likely to stay on policy headlines. Early next week brings impactful China data. I'll be watching dollar-yen for a downside bias if intervention talk intensifies, and Aussie yen for a softer tone given the policy backdrop in Japan. Dollar rupee looks tilted higher while foreign outflows persist, and euro dollar for signs of base building near multi-week lows. In commodities, I'll watch gold for range trading as geopolitical risk cools, and silver for consolidation after a crowded surge. The takeaway, policy signals are doing the heavy lifting, and markets are steady but sensitive to any shift in central bank tone or trade headlines.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.